What if I told you there's a VA loan strategy that most veterans have never even heard of, and it could save you thousands of dollars up front? Not a gimmick, not a builder incentive, and not some loophole. It's called the 4% rule on VA loans. And if you're active duty, retired, or a veteran looking to buy a home, this is one detail that could completely change how you structure your offer. Hi, I'm Darren Copeland with Summit Lending, and today I'm going to break down what the 4% VA rule is, why it exists, and how to use it the right way. So let's start simple. The VA loan is one of the most powerful mortgage benefits available. Zero down payment, no monthly mortgage insurance, flexible credit guidelines, and it was created through the U.S. Department of Veterans Affairs to give veterans a real advantage when buying a home. But inside that program is something most people never talk about, the 4% rule. And here's what that means. On a VA loan, the seller can pay up to 4% of the purchase price towards what are called seller concessions. Now, this is different from normal closing costs. With most loan types, sellers can pay a percentage of closing costs, and that's standard. But with VA loans, there's an additional bucket, up to 4%, that can be used for specific items that benefit the veteran. So what counts inside that 4%? Things like paying off collections or judgments, paying off credit cards to help you qualify, prepaying property taxes and insurance, paying off the VA funding fee, covering discount points or reduce the interest rate, and that's super powerful. So let me give you an example. Let's say that you're buying a $400,000 home. 4% of that is $16,000. That means the seller can contribute up to $16,000 towards these allowable concessions on top of traditional closing costs. And that's real money, you guys. Now here's the important part. The 4% rule is a cap on concessions, not closing costs in general. Many agents misunderstand this, and many lenders don't explain it clearly, and that confusion can cause veterans to leave money on the table. So here's another key distinction. If the seller pays normal closing costs such as lender fees, title fees, escrow fees, that don't automatically count towards that 4%. Only specific concessions fall under that cap. And why does that matter? Because when it's structured correctly, a VA buyer can bring very little to closing, get a lower interest rate, improve qualifying by paying off debt, potentially eliminate large upfront expenses, but it has to be done strategically. You can't just throw 4% into a contract and hope that it works. It has to align with the appraised value, the local market conditions, the overall strength in a competitive market like Kansas City. The structure matters. So if you're asking for 4% in concessions, you need to understand how that impacts negotiations. Sometimes it makes sense to increase the purchase price slightly to cover some concessions, as long as that home appraises. Sometimes it makes sense to use part of that 4% to buy down the rate instead of lowering the price. It's a strategy conversation, not a checkbox. And here's something else most people don't know. The 4% rule protects veterans. The VA doesn't want veterans overpaying for fees or being pressured into unnecessary add-ons. That's why this cap exists. It creates a boundary and ensures the transaction stays fair, but then there's the bottom line. Just because the VA allows the 4% doesn't mean you always need it. Strong strategy means understanding when to use it, when to ignore it, when to split it, and when to convert it into a long-term savings through a rate buy-down. This is where working with someone who understands the VA structure matters. I've been in the mortgage industry for over 20 years, and we've helped thousands of families navigate VA loans the right way here at Summit Lending. And the biggest mistake I see veterans make is they treat the VA loan like every other loan, and it's not, you guys. It's a benefit that you've earned and benefits that should be maximized, not just used. So if you're a veteran, active duty, or reservist thinking about buying a home this year, let's build a strategy around your VA benefit. Don't just ask, how much house can I afford? Ask, how do I structure this the smartest way possible? So if you're in Kansas City or anywhere that we're licensed in, just reach out to me directly, and let's look at your eligibility, your entitlement, your funding fee, and whether using that 4% rule makes sense for you. My name is Darren Copeland with Summit Lending. You served our country. Now, let's make sure your home loan serves you.